Hey everybody, welcome to Forex Trading Analysis for Synergy FX. It is 9:40 p.m. on July the 31st, Tuesday, and we're going to be looking at a few pairs, but quick risk disclaimer before we get started. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investments, so don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. Alright, so here we are. Probably should refresh this really quickly. We had GDP today and consumer confidence come out. If I remember correctly, GDP was a bad number and consumer confidence came in at 65.9, which was above expectations. But tomorrow we will have, first of all, bank holiday for the Swiss franc. Sort of interesting. Manufacturing PMI for the pound, as well as a FOMC statement for the U.S. dollar. So we should see. We really saw a slow few days for the dollar pairs. Really, the only trade we got in was a euro pound trade, which ended up working in our favor. But the U.S. dollar pairs were kind of slow, and that should pick up tomorrow with the FOMC statement. If we do see anything really major, then we'll definitely see some large swings. But for now, I don't think the FOMC will put out anything. I do think that people will be looking for reasons to go bullish dollar, though. If if there are a minor hinting at some form of U.S. dollar bolstering, then the dollar will go to the moon. So, but if there is a lot of bad news from the dollar, then I don't think that we will have too far to go down because I am very, very bullish on the dollar, and I'll remain that way. So pairs that I do want to take a look at today are the pound yen. First of all, the reason that I do like this pair is because we had a shorting opportunity up here, and a possible rotation down to the 200 and 100 hour moving average did occur, and the pair state remains below the 100 and 200 day moving average, while the 100 is beginning to slope to the downside, and the 200 is beginning to sort of flatten out a little bit and possibly head to the downside. So the breaking of this level is definitely huge just in this most recent bar. If we do close below it, which it looks like we most definitely will, then the 200-hour moving average is going to be a really nice area to define your risk at. Currently, we're trading at 122.12 or 13, and if we do, like I said, if we do close below the 200-hour, then this is definitely going to be a good shorting opportunity. So keep those charts open and make sure you get those trades in. One thing that does sort of concern me a little bit about this pair, though, is that we are currently in oversold territory. So if we do see a continued rotation to the downside, I think that a small correction will ensue first. So if we do start to see down towards 121.8, 121.9, I do believe that we will possibly see a rotation back up towards the 200 or 100 hour moving average, and then possibly a rotation to the downside. So keep that in mind that we are a little bit oversold right now for this chart, and a few of the other pairs as well. So the other pair I did want to take a look at is gold. The reason that I do like gold right now is because we're sitting just below the 100-hour moving average, as well as just above the 100-day moving average. So what this means for me is that we could possibly see a bounce off this 200 in the future. The 200 hour is currently printing at 1599.29. So if we do start to see a rotation to the downside, it's really not that big of a move for gold. Then we will also be around the 100-day moving average, and definitely a really nice area to define your risk with both of these two huge levels sitting on the same around the same price target. So if we do start to see a continued push to the downside from gold, which I believe we possibly might, I do think gold does have lower lows in it, as we have been rising for about 11 years now. Gold is in a well-deserved consolidation period and a well-deserved correctional period. So I do think that we will break the lows at around 15, 18, and we will start to see lower for gold. But that's just me speculating right now. And if we do sort of start to see near these levels, and we do start to break these levels, then definitely a shorting opportunity will occur. But for now, this does look like a long to me, just based on the fact that moving averages are indicating buying pressure to the upside. So those are the two pairs I really want to take a look at today. Sort of short video, but really not too much to talk about, just because the markets have been really slow. But should pick up tomorrow, and we should have a little bit more interesting video up tomorrow. So thank you very much for watching. Please follow us during the week at Synergy FX. Like I said, please ask us any questions that you do have about the markets or our products or really anything. We'll be glad to assist you with that. And yeah, good luck trading.